Says we're live. Welcome back, everybody. Another trading stream. All right. So a lot of people were expecting a bigger rally than this. And so this was like going to break the high and kind of come up, which is kind of what I was seeing at first. And I'm thinking that we might see something similar if it does retrace down, which is a little move. Okay. So first one hit TP2. I would say the second one's probably just going to hit TP1. Okay. It's going to hit TP1 and go sideways, or hit TP1 in reverse. If it does break above TP1, then we might get that afternoon rally that Chris just mentioned. So I think that that's one of the less likely scenarios right now. I think we're very likely to get like a sharp push down, get everybody kind of moving into the markets, and then we see like a sharp reaction back up. And I think we range today. Yeah, I do expect a recovery at some point. Told you guys this. However, I've been seeing some reports. Merrill Lynch put out a report 2 days ago that kind of shook me. It was something that I had talked about a lot. I pulled up the unemployment chart from the Fed website, the St. Louis Fed, and I showed you guys the historical lows. So unemployment at 3.2% to 3.5% is historically the floor, like the very bottom, like a crypto at the floor of its price. But every time that we're sitting at that historical low, we're typically about a year to a year and a half away from a recession. The recession typically spikes unemployment up to 4, 5, 6%. Fed cuts rates, stimulates the economy, then we recover. We kind of have a similar dynamic forming right now, and it seems like the sentiment indexes are starting to shift towards a potential recession. The economy has already slowed down significantly. I actually have to pull up Forex Factory because I missed the GDP print. A little bit late start today. Not GDP, excuse me, PCE. Okay, exactly as expected. So, the reason we don't have a very sharp move down, even though this is a horrible thing, is because expectations drive markets. So, like, let's say at Merrill Lynch, I didn't really care what the numbers were that were coming out, because regardless of what the economy is doing, there's somewhere I can put my clients' money to make them money. But what I have to know is what the playbook is, or what I can expect for the next 6 months in terms of policy. Because if it's going to keep changing every couple months, then I can't really invest my clients' money for the long term. So I don't really care about how bad or good things are. I just want to know, and I want you to be consistent with that for a long time. And that's what rallies are typically made of. So right here, we're not going to see a big, big, big crash right away, but this 0.2% print is very bad news. We're trying to get out of the inflation problem, right? We're trying to get prices to come back down. On a month by month, we're still going up 0.2%. These 0.2% add up. All right, 0.2% times 12 months is not 2.4%. Right? This is 2% growth. This compounds. It's 0.2%. Like all these numbers here, these are compounding. So it's 0.4%. Let's say that PCE is at 1. Okay, then you have 1.4. Now you're not, the next month, you're not at 1.7. Right? You're at 1.4, and then you have to add the 0.3% to the 1.7. Not in terms of addition, but in terms of when you compound returns, they have like this exponential growing. It's not just 1 plus 1 plus 1 plus 1. So very bad news for the Fed here. Looks like that whole idea of only one rate cut might go out the window. We might end up seeing maybe 2 or 3. Let's actually go see, is it the CME fedwatch? Next Fed meeting is in 5 days. That is the August 1st or July 31st meeting. I have to double check which one it is. Banks are reporting like 5.6 billion in losses. Yeah, because they can't lend. No one's buying houses, dude. Is it 120 trades today? Mike, go see, brother. The priest or the therapist, your choice. I don't care which one, but you got to pick one or the other, okay? Avoid the bar, and you either get the priest or the therapist, all right? Or a family member. What the fuck, dude? I've been there. I'm not even gonna like. Some people have a field day with that and be like, "How is that even possible?" Oh, I'll tell you exactly how it's possible. But I promise you, you don't want to go down that road, bro. Because the days where you're sharp and you're on it, it's bro, you milk to the point where it's kind of unfair. That was me the other day. Dude, I'm scalping every rejection at every 886. The second it pops, I'm up 1,200 bucks closed, 1,200 bucks closed. I'm sitting there at my boy's house, feet up, in about 30 minutes scalping at London session. It's like 2 days ago, milking the fuck out of it. And I had to, after the fifth trade, I stepped up. I was like, oh fuck, dude, I've been here before. Because when it's working, it's all working. When it's not, but those 120 trades are just going to be 60 winners, 60 losers, or maybe there's a bunch of winners and some of the losers are bigger, et cetera, et cetera. For mental peace, longevity, and for you to enjoy your life and not just, not just really be miserable, bro. Trust me on this one, less is more. I get it, y'all. Everybody got their system, but it's more than just the money. You can't ruin the rest of your life because I told y'all before, money only solves money problems, right? And I created a lot of problems in my life because of trading that money could not solve. Like you can't miss every fucking event. Now I understand people want you to go to the clubs and whatnot. Yeah, but don't even disrespect me by asking me. But you can't miss every birthday. You can't miss every one of these things, right? Then you get like, oh, now you're breaded up and you text a bunch of people, you're trying to do all this stuff, and now people are a bit more distant. You don't understand why. It's because you've done that, right? And this, I'm not talking to I'm literally talking to my old self, basically. If you guys are listening to this, trust me on this. Everyone wants to be like, yeah, well, I'll just figure it out once the money comes. Or, bro, trust me. Like, once I'm rich, like, you can have that problem, boy. I won't have that problem. Motherfuckers, who do y'all think I am? Right? God even prepared me for the money. I still fucked it up. I had gone rich and I had lost money about 5 times before I even saw trading success. Right? I had made almost 40 or 50 grand cash reselling shoes when I was in college, flying to California for sneaker con, flying to New York for the sneaker cons, and bringing my whole collection. Right? I would ship them in advance and just, be scared as fuck and be like, oh, are the shoes like the new human races, all these new Yeezys, one of one collections? I'm like, fuck, if this gets lost in the mail, maybe the delivery guy just takes the shoes because he like fucking he sees the Jordan logo. Lost that money in 2017. I had invested about $7,000 or $8,000 from the money I had from shoes. Um, and I had seen close to 6 figures on Binance. Didn't pull the money. I thought I was going to be a fucking millionaire, but I was holding. I was like, this is it. I'm the next Winklevoss twin, except it's just me, right? I'm just fucking making shit up in my head. A market fucking crashes. I ended up pulling up like probably 1,000 in profit, 2,000 in profit. I had gone through so many of these. I started a few different businesses that had fell, and I still had to learn more lessons when I started trading. All right. Um, so yeah, just take this from experience, though. I've been through this before. Now I'm probably making more money. Well, not probably. I'm definitely making more money than I've ever made. I'm supporting more people in a better way than I've ever done. I am in a better mental state than I've ever been in. And even though there's challenges with business and there's still like business expenses, like running the summit it'll make your head spin, right? Because like you can put aside money for yourself, but if you own a business and you're dead serious about it, sometimes you'll have to dip into your own funds and be able to support, the vision that you have and see it all the way through. Or you can give up because oh, I'm not getting rich off of this thing. Like, let me just dump it. No, no. If it matters, you'll make it work. So yeah, yo, that's what I got for you. What's up, Christine?
Hey Roy, thank you so much for the gems. I had a question about mindset pertaining to what you just said. How do you know when to push harder and go harder and sacrifice and when to kind of ease up? That's something I truly struggle with.
Okay, it's a solid question, and I'd have to answer it 2 ways. The first is everybody should make time. And I don't like to do shoulds and like this is what you should do, but trust me on this one. Everybody should make time for themselves to make sure you don't burn out. Because I don't care how much you love your job. You could be the pizza guy making pizzas. This thing looks like it's about to pop the fuck off. Y'all see this inverted, excuse my language, inverted head and shoulders off the daily support off this massive Model 2 retracement, about to break back above both fib levels, inverse head and shoulders, break below. All right. This thing is looking pretty solid so far. Let's see if it holds. So number one, make time to not burn out. If you're the pizza guy or like the musician that's still doing it at 60 and you see him at the restaurant, you're like, wow, that guy loves what he does. Guarantee you, yes, he loves what he does, but he does make time for the things that matters, right? So for me, like no one's ever going to know you the way you know yourself. So people could tell you, hey, you got to work harder and you got to do this. When you're crushed, you're crushed. So what I do is I have higher standards for myself than other people do because my family always tells me, bro, you're working too hard. People around me say like, oh, you're about to skip out on this again, bro. Like, well, like one day is going to make a difference. So I hold myself to the highest possible standard. But I also know that I can go too far with that, which is never enough, ever. Put your head on that pillow, mind racing, no sleep. You're just working. You're trying to keep pushing the ball forward. It can get unhealthy, right? So I hold myself to that high standard, but I need to listen to my body. So write this down. If you don't make time to take care of your body, well, I don't even know how to say this next part. Like your body's going to give up on you. Your body's going to crash by itself. It's not going to give you a choice. Your body will take time from you. Okay. I used to get sick very often. I had some immune issues when I was younger, and I was always getting sick. And then I was reading, I forgot what book I was reading. They said a man with a million wishes, or a healthy man has a million wishes, but a sick man only has one. And that's when I realized, like, you could think that all these things are a priority above health and above, taking care of yourself until you're sick. And all you fucking want is to be able to stand up and walk to the kitchen. But you got the flu, or you crushed, or you got this like heart issue because you've been grinding for 40, 50 years and you haven't taken care of yourself. You put in whatever in your body. Oh, I just got to make it through. You're at 7-Eleven grabbing whatever's. You gotta take care of your body or it will punish you for it. And one last thing about the health point or about the burnout point is that your body and life will give you signals. It's going to tell you what's wrong. But if you keep ignoring it, at some point it's just going to stop telling you and it's just going to break down. Okay? It's a priority. Ray Dalio put it as chapter 5 of his book, Principles. Principles is one of the 3 foundational books that we use to build the values of chart addicts. He built the largest hedge fund in the world, over $200 billion in management. Part of the culture there was making sure that you don't burn out. Okay? Now, the second piece of that is don't be a bitch. That's the flip side. The flip side is everybody's like, oh, well, it's not that. Oh, it's your 20s. You're going to enjoy your 20s. For what? What do you guys think? I'm pulling all-nighters at 40? Are you out of your fucking mind? I'm going to juice every last goddamn drop of my youth because that's when I got it. Roy, you're working too hard. All right, let's fly to Ibiza. Well, I can't. I gotta go to work tomorrow. The fuck you giving me advice for then? What are we? What conversation are we having? You guys understand where I'm going with this? Take advice from people who have the results you want. I'm at my boy's house the other day. I'm telling him, hey, because I think that this is true, right? This is what I've known my whole life. So I'm just saying this dumb shit. He's rich as fuck, by the way. I'm gonna protect his name. Like 20 he's got cars parked up in this thing. It like overlooks the whole thing. We're looking down at the car office, the whole nine, right? And I'm like, yeah, bro, I got an early meeting tomorrow. I'm gonna go and go rest up. I'm gonna get some sleep, wake up, finish this stuff tomorrow. Now, keep in mind, this guy's about 100 times richer than I am. Tons of things going on. Has a way bigger team. Can take care of himself. Look at me. Like, what the fuck are you sleeping for? He's like, oh, I didn't know you were rich. I was like, what? It's like, no, bro. I was like, I gotta rest up because I gotta be clear headed for the meeting tomorrow. Because if I'm not, then I'm not gonna do well. He's like, oh, so you don't know what you're doing? I was like, no, bro. I could do that meeting, off the back of my hand, like asleep. He's like, all right, then why you need 8 hours of sleep? The fuck is you need 8 hours for? And then it kind of clicked in that moment. Once I stopped convincing myself that I needed to go sleep right now in that second, I didn't really stop feeling that tired. I just kind of like, it just became normal. I was like, damn. I told myself, like, okay, everybody sleeps at this time because it's dark. Like, this is what everybody does. And so I have to go do this thing. But I wasn't even fucking tired. And I still had shit to do. Right. So you got to set the pace for yourself and knowing what you can handle. And you have to surround yourself by people that have the results you want because the common advice is going to give you common results. And if you look around at your friends, family, coworkers, society, the people in traffic, the folks who served you the coffee this morning, and you ask every single person, are they living the life they want, where they want? Are they dressed the way they want? They'd be like, yeah, I picked this outfit this morning. No, the way you want. I gave you a blank check today and a magic wand and the genie from that fucking Aladdin movie. What would you be wearing? Because it ain't that. Where would you be living? Because it ain't here. And where would you be working? Because it's not where you're working. You guys understand where I'm going with this? And some folks may be genuinely happy with their circumstance. I'm not, you know yourself. Clearly, I don't fucking know your situation. But for most other people, I know that they don't have, it's not the life that I want. Because I'm not trying to denigrate anybody's choice of life, how they choose to live. What I am saying is for me, I can't live like that. And if like, it would kill me to try to live like that. So I can't take that kind of advice. Now, if the security and if the conformity and if the commonality and the lack of being superb, if that is good, better for you, if that's what you want, because you just want to mind your business, then you really can take advice from almost anybody. Not anybody, but you can take common advice. Okay. So those are the two things. One, make sure you make time for yourself because burnout is real and you could be crushing it for however long you want. But if you burn out, you're done. And the second piece is also don't sell yourself short. People will tell you that you need to do this, you need to rest, you need to eat, you need to whatever. And realistically, as long as you're in a healthy, like you are being healthy about it. I'm not like just pulling all-nighters like days in a row, like not getting any sleep at all, having a shitty diet while I'm doing that, over caffeinating to compensate. No. You got to have a very healthy lifestyle in order to do those things, to have the machine run and to have that car drive you from East Coast to West Coast. You got to make sure you're not putting fucking vegetable oil in it. Okay. Um, so yeah. Christine, did that answer your question? I don't even fucking remember what your question was.
Absolutely. Thank you so much.
Oh, say less. Okay, so I appreciate this. T said, "Mad sick, bro. Bro was in the room sweating bullets." T was my roommate back then. Buddy used to see me, dude. We used to. I can't even tell you, man. Some of the podcasts that I did early on the channel, but I was dead. Like I was literally. I'm so glad we didn't have video back then because I couldn't even put into words how it looked. And then some of those things that we had to go do, flying out to go tour the venues and some of these things, getting sick. When we did that tour, with all the influencers at one time, showed up to the convention center to do like a promo video. No one had ever seen like anything like that before, right? They had all the supercars parked up. We were doing a promo video, and everyone agreed to be in the same commercial. All the influences before the politics and the beef, right? And the day before I'm supposed to fly out, dude, I get sick to the point where I'm out of commission. I had to send shout out to my brother, shout out to Paul, shout out to send some of the team members out there, and they crushed it. But that used to happen to me all the time. Fuck up my whole progress. Like I had to double down on my lifestyle and make sure that, and that was back when I feel like, yes, I had some issues with the immune, whatever, but it was the lack of sleep and the diet and the lifestyle and the stress and be drinking with the boys and drinking and things like that. All these things played into my immune system getting weaker and weaker. So as soon as I started to prioritize those things, I know I just said make sure you get like you don't need to oversleep and stuff. And now I'm saying, I was neglecting sleep, and that was one of the reasons. There's a balance between everything. Do I need 8 hours? Okay, personally, fuck no, I don't. All right, I need 6 or less. Why? Because if you sleep 8 hours a day, 1/3 of your life is gone. 1/3 of your day is gone. But if you sleep 6 hours, that's only a quarter. That's only 25%, my baby. That's a whole different fucking ball game. Fractions is fractions. Do you guys understand what I'm saying? If you sleep 8 hours, 1/3 of your day is out the window. If you only sleep 6 hours, it's a quarter of the day. That matters. That extra is going to help you get ahead. So if you're broke, if maybe you're not that creative, maybe you're dumb, right? Maybe you're not dumb. Maybe you are dumb. Maybe you think you're dumb, and you just don't think that you can compete. Maybe you don't think you can do it. Maybe you don't think that you can actually make it work. I guarantee you, if you give yourself an extra couple hours a day, 2 hours to get better, you give yourself an extra couple hours a day, 2 hours to get ahead of everybody else who was born rich, anybody else who had that college degree that you thought you wish you had. If you think you can't compete at those levels, wake up early. Give yourself that extra 2 hours a day, that extra 14 hours a week, that extra 56 hours a month, 56 hours a month, bro. I'll learn 3 languages, but I'll be fucking fluent in Mandarin 56 hours a month. You understand? You're like, well, I don't have time to meditate. I don't have time for myself. I don't have time for the gym. 56 hours a month sounds like a lot of time to get the fucking gym. All right. So it's not about time, it's about time management. It's not about, you can do it. It's about prioritization. And if you just don't care, you ain't gonna do it. And that's as simple as it gets. Shit, I'm out here, forgot we were on YouTube. I've been hearing word about a potential recession as well. I don't know why we're so bullish. Well, market's been crashing for about a week now, so I wouldn't say we're that bullish. We just dumped like 20%. Jay Powell may avoid the rate cuts talks in this upcoming meeting. Um, it's getting tough, right? They need a miracle to elect Kamala Harris. Like they need a Hail Mary for her to beat Trump. If the economy starts to turn down, there is absolutely no chance the Democrats will recover from this. If they keep it up, if they have, I'm gonna make some funny joke. They give the economy some Viagra, right? They just keep it up, prop it up just long enough to get us through the election. They could argue their way through it. You guys are about to see the most sickening display of media propaganda we've ever seen. Watch how they flip a complete mumbling idiot like Kamala Harris, who ratings lower than Joe Biden, who was the least popular president in US history. All right. How are you less popular than the less? Okay. She has never won a single primary in her life. And Mike Pence destroyed her from top to bottom in that last debate. She stands zero shot against Trump. Let's just be completely honest, right? So they have this person with a horrible track record or no track record, hasn't done anything of note at all, can't string a sentence together, turn her into the champion, this goddess-like figure in the span of 2, 3 weeks, right? You're like, Roy, people can't be that stupid to like fall for that shit. Are there enough people in America that hate Trump enough that they would have voted for a dead Joe Biden versus Trump? Yes. Would they vote for a complete moron like Kamala Harris just because they don't want Trump because they're that stupid? Yes. So I think that their job is not to make her seem competent, it's to make her seem just competent enough that she could compete against the Trump campaign. All right. So the media is going to spin the fuck out of this. But this is the warning and this is the advice I would have for all of you is that the media that's going to try and convince you that Kamala Harris is a good candidate is the same exact media that was trying to convince you that Joe Biden didn't have dementia 3 weeks ago. Okay? So the people that were just literally lying out their fucking ass telling you that Joe Biden is fine and he's the best candidate ever a week ago are now the ones trying to tell you Kamala is the candidate we should vote for. So obviously, not a fucking thing they say matters. The lying has gotten to a level where no one even pretends like these media outlets, and I'm not going to call them news outlets anymore. Okay, stop calling mainstream news mainstream or stop calling mainstream media mainstream news. It's not news. These are not journalists. A journalist is in the field getting answers for the people, right? The media, their job is to sell advertisement slots in exchange for human attention. So they keep you on the screen using whatever fear, salaciousness, the oh shit factor, whatever they got to do to get you glued. And then they sell ad spots, and you are the product. They're trading your attention. So they're about to go fucking crazy to try to get clicks. And with the fact that we almost just dodged a civil war, I don't think anybody here should actively engage in any of this stuff, y'all, because it's going to get pretty hot the next few months. Okay, pretty crazy. If they can flip Kamala Harris, if they can make her look competent, y'all, anything is possible. All right, I'm gonna flatten this trade. I'm just paper trading on this. I'm just fucking around. But we just hit that, the 886 as resistance. Okay, so we had broken below and used it as resistance. And then we had created a new low where the body of the candle closed below this low, kind of filled half the wick. And then now we're creating a lower high, retesting the 88 as resistance. Could we continue to the upside? For sure. I see the double bottom. I see the model too. I can see it coming back up, but it's a Friday. Volume has been a little bit wonky, and there's been a few too many fake rallies at these zones for my liking. Okay, so I'm going to bag the wins and then move forward. That's what I would do if I did have a live trade on, which reminder, I do not. But if I did have a live trade on, this is where I would be flattening the trade or at least securing some partials. See if I can trade. So I got 100 contracts open. So I would go ahead and sell 80 real quickly. So 80% of the positions closed. Trading, let's go to the trading journal. This was a tough week, people. I had 3 or 4 back-to-back losses this week. Um, but on the live, I don't know, man. On the live streams, we had a pretty losing week, or it was pretty dry to where there was no trades. On my live account, honestly, this was probably one of the craziest weeks ever. It was like in a good way. I told you guys the other night, I'm just literally sitting here 4 or 5 minute scalps at the 88.6. And instead of like, for example, let me find a good position here. These were pretty high risk scalps, but this is kind of like my lazy man's way of trading, which is if I'm going to go high or low to high, and I'm going to do the higher time frame zone. So let's see, I see it hit the 88.6 and I see it dip just a little bit below. I would enter 3 or 4 contracts on NQ, and then it would shoot up kind of as soon as it gets to that next fib level. I'm closing 3 contracts and I'm leaving 1 open. Okay. And then if it comes back to the entry or about halfway to the entry and it looks like, I've already made a lot of money. I really don't need to hold this to TP1. I can just bag the 0.7 to 1 trade. I'll just close it right there. Okay. Now, when I hold the trades, that's where my risk and reward gets messed up. That's where the win rate could potentially take a hit. But if I just keep doing that, where higher time frame daily zones, 4-hour zones that match up with the 88.6, I wait for it to get there and wait for it to dip under, entering big positions, wicks up, I'm securing the majority of the trade. My win rate is pretty fucking high. It's only when I hold it and wait for it to come back for the retest and stuff that it could reverse. Okay, so first rejection pops, larger positions sometimes. All right, now as I know some of the members are like, wait, but what about this? What about that? Okay, 2 years in the game, using the system, then you guys can start breaking rules. Okay, different. And honestly, the whole game has always been walk away in profits. And so the goal has never been to hold until take profit. The reason that we do that and the reason that we have the take profit system we do is so that the risk and reward makes sense. Because you can't just be taking profits early all the time and then not really being mindful of the numbers, because that's how you stay in break even, right? You cutting profits too short, then you have a regular losing trade, which you didn't even know where leverage on, but it ate away like all the good trades that you just took. And you're like, bro, what the fuck? Can't keep going up and down like this. That's why it's important to have the fibs, the numbers, just to make sure that you're not going to lose money. Like even for this trade today, the 88.6, the difference between waiting for the wick and the body is huge. Look at this. Okay. If you guys are interested in learning the strategy, by the way, the last time that we're teaching this class live will be this week. No, sorry, will be next month. So make sure that you guys grab your seats to the NASDAQ Masterclass. The link is in the description below. Okay, so the entry at the 88 here, if we just assume TP2, fuck the full trade, just TP2 or TP1. Fuck that, just TP1, scalp. Okay. If we're putting our stop loss below the wick, and I got this new fib level out for you guys coming soon for the NASDAQ 2.0 class for where the stop losses could be. This is about a 1-to-1. Okay, it's 0.98 to 1. Fair enough. Now, if my entry is below the 88.6, which it typically is, now we're getting above 1-to-1. And if you somehow caught the wick of the wick entry, it's 1.3 to 1. So the difference between making $980 and $1,300. Okay. Now, if I wait for this rejection, look how much worse it gets. If I just enter, still near the 88.6, but at the body. Now we're at 0.7 to 1. 0.7 to 1 versus 1.2 to 1. That's twice the money. So if some days you're catching it just under the 88 and some days you're catching it right at the body, then your number is going to be completely off. Like just this little difference goes from double the money, 1.2 to 0.7. And if you waited till the next fib level, oh Lord have mercy, 0.46. So if you're getting in late, you can't take profits at TP1. So you have to hope that you make it through this period right here, which always happens. It gets to the TP1 and consolidates. You better hope it keeps going. For me, as soon as it breaks above that TP1, okay, if I got in at the right entry, I'm already at 1.1 to 1. I'm good. I'm done. I'm off for the day. You guys see what we're going on here? So I can't go into too much detail because we do have to save this for the class, but trade is looking really, really good. And this is why we don't close the full position. I mean, obviously we're coming up to the 886 on this side here pretty soon. So that's likely where we'll see a reversal if there is one. Right there. All right, if we make it above this level, then we're in the clear. We're going to go straight up. It's going to come back to test, and then we're going to continue. Higher time frame, that retest is, you guessed it. Okay, let's see what questions we got. If you guys hopped on a little bit late, checked out Forex Factory, we had the PCE index come out exactly as expected, 0.2% growth month over month. So for the month of June, prices went up about 0.2%. I haven't checked the full report yet to see if there's seasonality. Like sometimes flights, hotels, goods get more expensive in the summer because the demand is higher, right? And so we'll check if there's a seasonality aspect to the PCE. But I hopped on here because we never really did this yet, which is 5 days away from the FOMC meeting. It's going to be the 31st, if I'm not mistaken, or the 1st. I think my shit's frozen. Oh no. We were doing so good. What happened? Let me close up some tabs, see if that works. Okay. So we're going to go to the probabilities section here to look at the probabilities that the market is betting on for a rate cut. So there's about 100% chance that we're not getting a rate cut August 1st. There's about 100% chance. Okay. There's a zero, or sorry, there's a 0% chance that we stay the same in September. Okay. So it looks like we're getting that first rate cut September, people. Looks like that's what the market is betting on, 90%. This is for the Fed funds futures, which is basically futures contracts, the derivative contracts that people can bet on relating to what they think the interest rates are going to be. So like we think that if you're trading Forex, you think the interest differential between those two currency rates is going to be different. Okay, so you're betting on that, either going up or down. When we're trading NASDAQ, we're betting on price going up or down, and then these guys are betting on the interest rates going either up or down or staying the same. Okay, you can bet on damn near anything. If you can bet on horses, you can bet on markets. 11, so we got November 7th, we have a 30% chance of a rate cut, 61%. So it looks like between September and November, very, very high probability of those rate cuts. And it looks like December, there's a chance we get another rate cut. What the fuck is wrong with the Fed funds futures market, bro? These people are out of their mind. But let me tell you, let me just burst their bubble. We ain't getting 3 rate cuts. Okay. Okay, Roy, how do you know? Do you work for the Fed? Roy, these are the smartest economists in the world. You're just a degenerate who curses a lot on YouTube. How could you possibly say that they're all wrong and you're right? I do it every day. When Bank of America wrote that piece on gold going bearish and we put up the magnet super secret magnet indicator, and for 2.5 months that did nothing but climb, I'd say that we did something right. And then right now, if the smartest investors in this, I mean not the investors, the smartest economists in the world are betting on 3 rate cuts this year, let me tell you right now, if I have to sit here and sound arrogant and make it seem like I'm being self-righteous, I will. We ain't getting 3 rate cuts. That's like me dating Halle Berry, right? Want to, but come on, right? Let's get real. Oh, NASDAQ is flying. Awesome stuff. That's what I would take. If I was in the live trade, I'll take more partials. Oh, nice. And then set that take profit level at, set the hard take profit at um, 19,500. That's on the Oanda chart. Let me modify this. NQ 19,500 would be what? So same price on the E-mini futures. Okay. That works for me. Same price on the CFD charts. Slightly different on Pepperstone, 480 or 465. Basically, get on the 1 hour. All right, you guys see this massive bearish impulse coming down. Look at the last area of consolidation and that support right there. That's where the target is, right? That's the target. So you can do that math yourself. And let's see if we get this recovery. By the way, so what happened with the yen is actually a pretty big deal. The Bank of Japan operations, especially next week going into their news meeting, this is something I've been writing about for so many years. This is something I've been waiting on for so many years. And even though I think we're going to see some effects of this temporarily, I think they're going to flip real quick. They're going to switch up real quick. Why? Because they can't afford to do what they're doing right now. I've explained this about a million different ways. If you guys have questions about it, I can break it down. But I had a conversation with Bob Elliott on our channel. I would highly recommend that you all check that out. On the YouTube channel, you go Bob Elliott chart addicts. Try FX replay backtesting. Oh, let's fucking go, FX replay. They're one of our main partners at the summit this year. They're the ones who are sponsoring the trading challenge. They have arguably the best backtesting software in the world. TradingView doesn't let you go down to the 1 minute when you're doing replays. It doesn't let you go back beyond a certain point because they don't have enough data, and they don't let you use the indicators on the backtesting features on smaller time frames. They also don't let you like TradingView doesn't let you input lot size parameters and spreads to give you a real market result, but FX Replay does. And so that's why they're helping us kind of build a custom platform for the trading challenge this year at the summit. We might do a global tournament where everybody can still participate even if you don't come. So this is going to be very exciting. And for them to be sponsored right here in the middle of the stream, bro, good for you. I can't even be mad about the ad right there. Like that's dope. And funny enough, let me check my calendar, bro. I'm gonna have a meeting with them in about 30 minutes. That's how you know God don't do coincidences, man. That's crazy. I've never seen their ad before in my life. That's honestly why I'm bugging over it. So Big Bob, clearly one of the smartest macroeconomists in the world today. Yo, shout out to YouTube. It timestamped it. Oh, the Fed and the Treasury. I don't think it timestamped the second half because I think we talked about Japan here in the second half. Hedge fund performance, alpha, chasing the highs, wage inflation, unemployment. We talked about so many topics. Real economic growth, quantitative tightening, Fed and Treasury. Let's see here.
Yeah, it's really,
Okay, here's my biggest takeaway from
and then
from this, just to kind of like break this down. The most important thing that Bob said was make sure to click the link in the description and head over to the link so that you guys can check out the NASDAQ Masterclass chartaddictsfx.com. That was good. Okay. The second biggest thing that I learned was look at the biceps in the fucking video. All right. Come on. You're telling me to talk crazy. Bro, the shirt was fighting for its life. You understand? The shirt was fighting. Benefits is out of the question. And so we're either going to have a productivity boom that outpaces
in order to, we've seen gold pressing to new highs.
Yeah.
It actually has
What's
very
up with this
little to do
audio?
with what's going on in the U.S. U.S. investors aren't particularly interested in gold, at least at this
This audio is kind of shot. Is it just me? But no wonder the views are low. As I say, like the video quality is good, right? The conversation is probably the best conversation about economics on YouTube right now. But 1,000 views is ridiculous. I know it's a long video, but even if you watch a certain percentage of it, it'll still count as a view. So I think it might be the audio, right?
Point. And it has everything to do with how China is dealing with its debt problem.
Nice. Okay.
Make money too
This is
easy,
the
which
section.
means that, inflationary problems emerge.
Yes.
And what I'd say is in both circumstances, whether it's too much inflation or too little,
Yes.
too much deflation, we will probably see people move towards hard assets
Yes.
as an alternative to fiat money in that context. And so the story, for instance, in gold that's going on right now is, we've seen gold pressing to new highs.
Yeah.
It actually has very little to do with what's going on in the US. US investors aren't particularly interested in gold, at least at this point. And it has everything to do with how China is dealing with its debt problems.
Mm-hmm.
And so I think it's a good analogy to, we may see a circumstance where all the fiat currency, where the dollar might be the strongest fiat currency for all sorts of different reasons, depth of the capital market,
Sure.
innovation, productivity in the US economy, et cetera, et cetera. But they might be all depreciating relative to hard money.
Hard money, of course. Well, which is basically what's happening now, is that
Which is happening.
And the biggest risk now is that we may be able to get the consumer inflation problem under control, but we may exacerbate an asset inflation problem. Or not, it's a problem if you don't own assets, and it's probably the best case scenario if you do own assets,
Yeah,
which the majority of the country doesn't.
It's a particularly tough problem for people who hold bonds.
Okay.
Because no matter what, if we have too many bonds, then they've got to get cheaper in one form or another than how they're currently priced. Currency for all sorts of different reasons, depth of the capital market,
Sure.
Innovation, productivity in the US economy, et cetera, et cetera. But they might be all depreciating relative to hard money.
Hard money, of course. Well, which is basically what's happening now, is that
Which is happening.
And the biggest risk now is that we may be able to get the consumer inflation problem under control, but we may exacerbate an asset inflation problem. Or not, it's a problem if you don't own assets, and it's probably the best case scenario if you do own assets,
Yeah,
which the majority of the country doesn't.
It's a particularly tough problem for people who hold bonds.
Okay.
Because no matter what, if we have too many bonds, then they've got to get cheaper in one form or another than how they're currently priced. And it's a good thing if you hold things that are not easily devalued through money printing, which is things like gold.
Okay, got you. So then I guess the last question I would have would be, so we were talking about the sustainability of the government debt problem. Now, if you're a modern monetary theorist, then debt is relative. And so as long as the relative debt across the world is rising at similar levels, the game is sustainable. What I'm referring to is the kicking the can down the road in terms of never really dealing with financial crises and never letting the air out of the bubble. And even though we have had a bit of a slowdown, there's a ton of zombie companies that are still around. And I'm wondering at some point, will we have to reckon with the kicking the can down the road in terms of not dealing with these crises, or is there a soft landing scenario there? My generation is going to have to deal with these problems, Bob. We need some guidance. We're going to have to deal with these. I want to buy a house and have a family, and you're telling me I have a 90, because you're talking about post-war periods, after World War II to deal with the deficit, it was 90% tax rates.
Yeah, that's right. It took about 40 years. That's right.
I don't know if Americans are going to accept anything higher than a 50% tax rate today because of, just because of the current demographics.
Yeah, I think it's going to be a challenging dealing with those sort of legacy issues. Essentially, is going to.
He basically said it's y'all's fucking problem. All right, he's like, yeah, that's above my pay grade. I'm like, brother, you got the highest pay grade. Like, if it's above your pay grade, we're fucked.
Be particularly challenging. I think they are solvable, but I think it's probably going to take a lot of conflict because at the core of what you're describing is who are going to be there's
Mike, I would avoid selling only because if it is going to rally, I mean, then it's valid, but it's Friday, bro. It might break this high, kind of go up to fill half of this wick right here. I know it's kind of hard to see. Let me zoom in. Get down to the 1 hour. I think it ended up being right there. Oh, wrong feed. Yeah, it's almost there. Almost. So I would wait for it to break, hit the body of these candles right here on the hour, which is like 205. So we got another like 40, 50 points. And then you could see like a wick rejection down. Entering now, you'll get caught in like a 50 pip drawdown for no reason.
There's going to be a process where, you know, the outstanding debts that exist in the economy and the areas that are propped up are going to have to get reset. And the question is, who is going to pay for that?
Yes.
Either explicitly in the sense of like higher tax rates,
Yep.
or implicitly from the perspective of like, you know, are we going to run are people in the younger generation never going to be able to buy a house, right?
Yeah.
Because we've created house
Asset
price inflation,
Yeah.
right? There's winners and losers in that circumstance.
And
right?
picking who's the winner and the loser is a game that no one's going to vote for, because when politicians want to get reelected, and this is what's so difficult about, let's say, no one is going to cut spending in Congress because the entitlement benefits is their voting base.
Yeah.
So as soon as you cut Medicare and Medicaid and Social Security, you're going to have a lot of unhappy voters. It's not the young folks that are voting. And so the cutting of the spending for entitlement benefits is out of the question. And so we're either going to have a productivity boom that outpaces the rate of the debt, which I think AI could deliver.
It's really,
You know,
I'm betting against, you know, betting on America to come up with a productivity solution is, you know, over time, over the last 300 years, has been a good bet.
I like that. That's probably the best. That's the best way to end the go. So we had the most.
That's the optimistic side of me, which is like AI really could give us that second tech boom like we had in 2001. So the Industrial Revolution really took America to the next, you know, to the world dominance. Post World War II, World War II production of weapons and everything else, and then post World War II kind of reconstruction really took America to the next level. And then we had the tech boom kind of really put America on the forefront because the largest companies in the world now, Google, Amazon, Facebook, the rest, are here in the States. And this is either going to be the end of the show and we're going to basically go on a slow decline from here, or we have the second leg of this tech kind of boom with AI increasing productivity so much that GDP climbs just fast enough to help us get out of these problems. And I'm hopeful about that, as long as we don't have a country of people who, instead of being motivated to take advantage of the opportunity that America presents by being a capitalistic society and by having a country that supports businesses to go and make money, as long as we have a country of people that appreciate that and want to take advantage of that and want to keep that alive, then the productivity will continue and it's just natural. If we kind of get into this place where everybody thinks America sucks and there's just no hope to build something long term because the state of affairs is so bad, because the way that cities are run is so bad, then productivity will slow down. So if you respect your environment, if you have hope for the future, then you'll work a lot harder and you'll be more hopeful about starting businesses and becoming economically productive. Okay.
Pessimistic conversation up until now, and then we finally finished off with something positive, which is don't bet against America.
I think I asked them about Japan during the convo, but I think there's also a section here. I'm just trying to find that section for right now.
Ingenuity or American.
Yeah, exactly. I mean, I think anyway, it's any person who studies markets and economies over time has to at least acknowledge American exceptionalism. And so, so don't bet on America over time. I think functionally, probably what's most likely to happen with that is either we're going to create a political constituency that's going to force essentially the gains that exist in the older cohorts to be at least somewhat transferred to the younger cohorts in order to create an acceptable outcome for younger cohorts. Or I think actually what we're seeing today is the way that that's getting resolved is through the intergenerational passage of wealth.
Yes.
And that essentially what's happening is the private sector is recognizing that there's an intolerable divergence between what the older generations have and what they're receiving in terms of benefits and what the younger generations have in receiving benefits, and basically just doing the transfer on their own.
Yes.
There's a lot of societal implications of that.
Is there a way to do it without it being a socialist sort of movement? Because when you're talking about transferring wealth around, both implicitly or explicitly. There's like a bad feeling that goes around that narrative. Is there a way to do this in line with the current demographic perspective of Americans?
Well, I think the main risk is if you essentially leave it to the private sector the way that it's happening now. And when I say that, I mean like, you know, most millennials who are buying homes have some support from their parents, as an example, right? Like that's an example of what's going on. The challenge with that is that it creates intergenerational concentration. So the people who were the haves are their offspring are more likely to continue to be haves.
Yes, of course.
And it locks out the people whose parents were the have-nots in a way that I think certainly is inconsistent with the strategic values
Yes.
of the US economy and what drives dynamism in the US economy, what drives dynamism.
And I'm not I'm not completely opposed to the death tax or the estate tax to some degree. The death tax, I think, makes a lot of sense because when it's your time to go, a lot of folks have been just hoard the wealth and they give it to, excuse me, they give it to their children in the form of some kind of trust or whatever it might be. But typically the children of the folks that accumulated all that wealth are not as capable of being the steward or the manager of that wealth the same way the parents were. So they end up, I mean, this is where we get a lot of destructive behaviors through generational wealth. And this is also where we get folks who maybe are actually productive in society, but they have too much money. So I'll give you an example, like George Soros' son. I think his name is Alex Soros. So he just inherited, the Soros Foundation wealth, which is tens of billions, if I'm not mistaken. And what he's doing is going around funding ideological movements around the world in governments and campaigns against certain people and propaganda and all these things. That's why the money should go back into the game. And that's what basically what Bob is saying is like, if we just keep this show rolling the way it is, and the rich are just getting richer right now, that means their kids are only ever going to get richer. And then if you're poor right now, your kid's only ever going to get more poor. And so that's why you got to get rich, people. Okay? We don't have a choice because the way that prices are going and the way that the economy is going to work is same as it's always been. Don't hold cash and own assets because they go up in price. But now it's just going to get a lot more aggressive, where housing prices used to be, 300-400 grand for, let's say, a 3-bedroom home in Virginia. Now you're looking at the same homes, 550K. Okay. And then in the future, let's say there's 700 grand. Like the difference between a 300K house and a 700K house is night and day. About 2 tax brackets of a difference. You guys get what I'm saying? So if you just want to hold cash or be paycheck to paycheck, it's always stuff at the stores is just going to keep going up over time. But if you own assets, those will also go up over time. And that's where real wealth is created. Roy, is English your first language? Very well spoken English. No, it's not. First, I spoke French because I was born in Lebanon. And then when I was about 8, we started learning Arabic. Those are about 7, right? So you do French until a certain age, then Arabic. And then when I was 11, I moved to America, and that's when I started learning English. Okay. Okay, so I had pulled up the PCE report here. I found something pretty interesting. So there's some good news and some bad news in here. First, the actual PCE index is 0.1% growth. So in June, prices went up by 0.1%. The core PCE, so you take out food and energy, was 0.2%. So it seems like food and energy prices, those are pretty stable or going down. But then you have the actual, like the consumer goods, like anything that we spend money on, whether it's services or goods, that went up 0.2%. So that's not good, right? But when you look at personal income here, we have wage inflation or wage growth at the same exact rate as the core PCE growth. So yes, prices went up, but on average, incomes also went up by 0.2%. Now, this is a median, or I'm pretty sure this is an average number, which means that most people on this call probably haven't gotten a raise in the past 3 months or 4 months, or probably have not gotten a raise of 0.2% last month. But they're saying that if you take all the salaries and the incomes in the whole country and you find the average, it is keeping up with the average, rise in prices. The reason I don't like averages and things like this is because it's inconsistently distributed, meaning that you could be living in California with, and you didn't make any extra money, but prices went up way more than 0.2%. Or you could be somewhere else where, let's say Miami, where prices haven't really gone up that much. Miami wasn't the cheapest to begin with, but like you go to the restaurants and stuff, it's about the same. But if you're working in Miami, you are getting paid more. The opportunity here is more. Okay, so it's not evenly distributed, but on average, that's how the distribution is. The fact that personal incomes are going up is actually not a good thing, despite what most people would say. Why is inflation still high? This is the last point I'm going to make before we have to hop off here today. But why is inflation still high? Is because people continue to pay the prices, right? If you're living in a $400,000 house right now and you're like, oh, I'm going to list it for 700K, and somebody buys it, now the prices of the homes in your whole neighborhood just went up. And if the next person comes in, sees 700K in the same neighborhood, buys it, those prices are never going back down to 400. So the fact that people are getting paid more means that they will continue to spend money, continue to buy goods at these high prices, which means those retailers are never going to bring their prices down. If I walk in my barbershop and he's charging 40 and I pay the 40, he's not going to go back. He's not going to be like, oh, maybe I should just drop my prices now. Once he sees that I'm willing to pay 40, it's game over. Mike, I did body to wick, and we didn't exactly hit on the 30-minute, but on the 1 hour we did. Damn. My bad, bro. That was such a clown move. It was right here at the head and shoulders too. All good. Think we see 61 retest and then push. You said I scalped it? You fucking savage. Love to see it. Like that's why if there's two options, which is go body to wig on the 1 hour or do it the way that we've always been doing it, which is see if you can hop down to a lower time frame and find the true body. I would always rather trust the true body if I'm going to be honest, because I'd rather miss a trade than enter early. Okay, especially now in my trading. So if I do have two zones, okay, right now it's at the 78, could be a false flag, but we have two. I'd rather hit the top one. And if it doesn't hit the top one, then I don't want it. And that's fine. Then we hit this. All right. Let me see. Are we still on YouTube? Or we are. All right, everybody, please drop a like on your way out. We got a bunch of people watching this, but not a bunch of people hitting the like button. Also, if you guys have not already, make sure to check out the NASDAQ Masterclass. The price is $500 for the class. It is nothing compared to the amount of money that you'll waste either losing challenges or funding accounts that you're just honestly just not prepared to grow over time. You guys can use custom promo code chart addicts at checkout. If you guys want a discount, I would highly recommend checking this out. And fxsummit2024.com. Tons of new speakers getting announced. Shout out to Swaggy and Raja for hopping on board. But we have a few more surprises for you guys coming up today and tomorrow in terms of speakers. And we're saving some of those speakers for a surprise. So if you come to the summit, you'll have a few folks speaking on stage that, let's just say, you may not have expected. And it'll be well worth the trip. All right. You have about 4 months to grab your tickets, flights and everything, or to start calling off work and stuff. So make sure you guys start making those plans now. If it's a financial thing, at least make the plan so you know exactly what it's going to cost you, and then start to work towards it so you can make it out there. Anybody here that's been to the FX Summit, let folks know in the chats if it's worth the money, if it's worth going all the way out there and going out to Dubai. Because the ones in Miami, I think, were so impactful for business owners, for honestly, for everyone. So I think it's been incredible. Christine said, Roy, have you thought about having Wall Street Trapper come out to the summit? Yes, we have, and we have a very good connection with Wall Street Trapper just through, well, I'm not going to put them out there, but the thing is we have to, like, even the folks that we're bringing in terms of massive influence, we're trying to find people that are big on that side of the world. And so a lot of the influencers that were huge in the Miami show, they're really not having the same pull when we kind of ask around out there. But folks, there's a lot of folks that do have a great following out there, and people would definitely want to come out and see. Swaggy just happened, because he also lives in Dubai part-time, and we have Umar potentially, and we have some of the prop firm guys, the top 4 prop firm traders in the world coming to speak. So it's gonna be a great lineup. For Trapper, there is a way that we can make this work, but we'd have to really stretch it and put him on stage with other folks who are some folks from there, some folks from the West, and kind of make it work. Anyways,
Yeah. I'll
happy
text you when we get off live.
I got you. We'll make it work. All right, possible sells. Dev, we ain't selling. All right, take it easy, all. Happy, safe trading. Peace. All right, send a message in the chat. We'll keep up the combos there. Good shit. Anybody that caught the buys. So Dubai's going to be